Hello, Jim here. We've been through a rough time in the market. One of the silver linings of going through a crash or a correction is the ability to pick up some really good stocks or ETFs at dirt cheap prices. Today, I want to talk about that. I want to talk about two positions that recently were assigned to me that I really have wanted to own for a long time. I'm also going to share with you if you've never sold options before, it's a great time to get started. I don't know that we're at the bottom, but I believe we're closer to the bottom than the top. So it definitely is a good time to get started if you've never started before. So today I'm going to share with you these two particular stocks that I think are a great value and what I plan to do with them going forward. So stay tuned. I think it's going to be well worth your while. Okay, let's jump right in. I do want to mention that it's been a rough week. Monday and Tuesday down, Wednesday up because of Trump's announcement. And today we've lost probably half of what we gained yesterday. I do think this is going to continue. I don't know how long. I know he's extended the tariffs for 90 days. I'm hoping it doesn't go on for another 90 days, but it might. It might even go on towards the middle to the end of the year. Um, have we hit the lowest low? I don't think so. I would not be surprised if we hit new lows. We potentially have like a 30% decline. I mean, we go down another 5 or 10% from here. I don't know for sure. Things could change rapidly if they make some agreements. But in the meantime, I'm continuing to try to pick up good names. I picked up 50 shares of Nvidia last week, I think on Friday, or no, actually it was Monday, I believe. And I'm looking to do some dollar cost averaging. I encourage people to do that, buy a few shares here and there in some really beaten down names. And by dollar cost averaging, if we continue to go down, you'll be picking them up at ever cheaper prices. So just something to consider. Now, if you have a lot of cash and you're holding back from selling puts, it may be a good time to sell puts. There's some names that may work out really well for the wheel. For instance, SoFi is dirt cheap now. I believe it's around $9 or $10. So you could run the wheel on SoFi right at its current price, and if it gets assigned, then you can turn around and sell a call. Both calls and puts look really good with it. So something I'm doing currently, and I'm going to continue to do that. I'm also going to look at vertical put credit spreads on some of these really beaten down names. Um, some of them are really gotten dirt cheap. And if you sell a put at 5 to 10% lower than the current stock price, you might not get it at the biggest or at the bottom, but you're going to get it within maybe 5% of the bottom or 10% of the bottom. It's less important to try to get it at the bottom. It's more to try to get a really good deal with it. You're never going to hit the lowest point. But if you're 5 or 10% from that lowest point and the stock doubles, triples, or quadruples in the coming years, you're not going to miss the fact that you could have done $1 or $2 better or $5 better. You're just going to realize, wow, this is appreciated a huge amount and it's worth quite a bit. So that's what I'm encouraging people. I have a lot of positions that when the market truly crashed, it became very deep in the money. Now, buying these long puts really does protect you. So in the cases for my assignments, those puts became worth a lot, sometimes 14, 15, $20, which allowed me to pick up the shares fairly close to what they are currently. By buying the long puts, as the stock dives, the put becomes worth more and more. And I prefer to sell them and use that to lower my cost average on the particular shares. And that's what I'm going to share with you at the very end of this video with two positions that got assigned to me. One was Micron and the other was Seagate. And because of the long puts, I got them at really good prices. So stay tuned to the very end where I go over those details and how I manage those and how I'm managing some of the other positions. One thing that I have mentioned um, to a lot of my members is I'm working on almost like an outline or a chart that's probably going to be a guide on how to manage high risk positions. It's going to talk about all the different ways to roll it, all the different ways to potentially get out of the trade in a safe way. One of the things I just recently added to it is rolling from one position or one stock to another stock. For instance, if you're in a particular company that you don't want to own. Like one stock that I might consider doing this with is Four, and it's very similar to PayPal and some of the other payment processing systems. It is a good company. It does have good numbers and fundamentals, but I'd rather have, maybe an Amazon or maybe PayPal instead of owning Four, so I could roll from Four into PayPal. Now, it's a little bit difficult to do. You have to have two trading pages open at the same time, and you know what it would cost you to close Four, and then on the other trading page, what it would, what you would earn by opening a new position and say in Amazon, and then you can adjust it to hopefully completely cover what your costs are to close your existing position. So that's something else that we're talking about in the membership. And one of the members recently did it. I think he rolled to Amazon, maybe from AMD. I think he went from AMD to Amazon. So something else that I like to talk about that I forget to talk about it a lot. But there's also a lot of other ways you can potentially roll. And then, you know, using a planning worksheet, I'm able to keep track of it. I still have my goals. I'm still trying to earn around 8,000 this month. It's going to be difficult because a lot of these assignments are so deep in the money. So I am taking a potential loss with a lot of them, but I'm picking up the stocks, maybe not at their current price, but only a fraction above where they currently are. Some of them with the jump yesterday or the pop or rebound yesterday, they were actually in positive territory. At that point, I had not taken a loss. Now, I think that changed today with, again, some of them getting really hammered. So, next, I'll share with you what these trades look like. I'll go over what I share with my membership and how I share it, and then, how I plan these trades going forward. So, stay tuned. I think the next part will also be well worth your while. Now I've opened up my Patreon. I was going to show you what it looks like when I share a trade with my membership. This is a trade I did today. I actually was able to roll NVIDIA 110 100 out from April to May 16th, just to buy myself some more time. I would love to own some more NVIDIA, and I probably will end up owning these. I currently have 200 shares, and I'd be fine with 400. Now, here's the first company I wanted to talk about, which is Micron. Um, and I really like Micron. So this trade, I've been dealing with it, I guess, for a month or a couple months, and I've been rolling it, and I brought in quite a bit of premium. I think even before it got assigned to me, I had made like $1,400 on it, which I forgot to mention here in this posting. But I was assigned 200 shares. It was yesterday morning. The total was 19,000, so it was 200 shares at 95. And then I sold the long puts and I made 28.10.56, which is just around $14 per share. So if I had not had those, I would have not been able to lower my cost basis by $14. So instead of 95, my cost basis would be more like 81. And then I also sold some covered calls right after, with the market up. I went ahead and sold some covered calls, made 470.62, which brought my cost basis into, in like the right here, 78.80. So I like MU. This is pretty much what I wrote for my membership. I like them. I might pick a high to get out. So they have really good numbers over the next year and a half to 2 years, but the numbers do seem to drop after 2 years. So I may only hold them if they get profitable enough. I may get out. So, for instance, if they double later this year, I may go ahead and sell them, just with the understanding that they don't do as well, I believe, in 27, but we'll look at that. I'll share with you on Seeking Alpha. Actually, I mentioned it here. They will do great for 25 and 26. Earnings will be flat in 27 and actually down in 28. So I've always said that I want to own the stocks forever, but I'm not doing that anymore. Buffett doesn't even do that. So I'll probably get out of them before it's flat in 27. So maybe later this year, early next year, or sometime next year. But my cost basis is 78.60. Now I'm not taking into consideration what I've earned. I think I've earned another 1,400 before I ever got assigned. So it's actually cheaper. It's more like 71 is my cost basis. Um, and this is just talking about the big bounce in the afternoon. They were up 11.54, got up to 77.08. I believe they finished even higher. They might have hit 80, but it was up 15%. In a minute, we'll see where it is currently. They haven't announced earnings. They don't. They just had earnings, I believe, in March 20th, so they probably don't have earnings till June. Um, and I typically will share a little bit more about it. So, and then I share a little bit about the trades. It's in my rollover IRA, which almost all my puts are in the rollover. And I actually got a margin call in my rollover, which was interesting because it worked a lot different than it did in my brokerage. So that's typically how I share trades. So you might ask, well, why do I like Micron? So let's switch over to Micron. So they're 69.99. They're down almost 10%. So they were up 15% yesterday, down 10%. What a crazy market. Um, I usually will come over here and I'll start in the summary. So they have an 11 PE. You can see here they're very oversold in my mind. I think they're dirt cheap at 69.94. They got way up even recently. I think they were up over 100. That's 103. Back here they were up 144 or 145. So they could very well potentially, when we do get a rebound, they could be up that high again. They do pay a really small dividend, but if you look at their profitability, A plus, they have very good profitability. I'd prefer their return on common equity to be a bit higher, but it's still good. Their cash from operations is really good. Um, that's an A plus. You can't ask for more than that. Growth, another A plus, really, really good growth. Revenue growth year over year, almost 71%. Forward looking, almost 42. And income growth, 289. Valuation, they show them a C, but it's primarily just because of these factors. I don't, I think they're a great deal at this price. Capital structure, they're worth 87 billion or 92 billion. Their total debt is 15 billion, so much lower than the 50% debt to equity. A lot of cash, almost over 8,000, 8,228 in cash. So, looking good. Dividends, again, they pay so little, but at least they do pay. It's a little bit of pocket change you get by owning them. And then earnings, this is what I was talking about before. So they had earnings on 320. They beat earnings. Um, Not by a huge amount, 14 cents for earnings, and then beat revenues by almost 155 million. And you can see they're increasing pretty nicely. And then if I like to look at this for earnings estimates, and this is what I was talking about. So they jump big time here, and then they small jump, almost flat. And then this is negative 23, so it drops, but they still are earning 889, which, in today's dollars is still like an 8 earnings per share or almost a 9 earnings per share. So you can see they've got all the things I like to see: the valuation, good growth, good profitability, okay with debt. They have pretty good ratings. Over here, you can see Wall Street really likes them. This is based on what the SA analysts think of them, and you find most of that down here. It's how the people who write for Seeking Alpha, they're rating them a buy or a sell or a hold. So the last hold was quite a while ago. So you can see a lot to like about them. I'd be fine with owning even more shares. I picked up 200. I already own 200, so I own 400 shares. I wouldn't mind picking up another 200. So that's Micron. Let's jump into the next one. The next stock I wanted to talk about that got assigned to me actually last Friday is Seagate Technologies. This is one I've had my eye on for a long time. I did at one point roll them from 2 to 300 shares, and I believe I even widened the spread a little bit to bring the strike down. And then they were still assigned to me. So I'd earned quite a bit of premium on them originally before they were assigned to me. So here you can see it was 300 shares were assigned of STX Seagate at 95 at 28,500 is what I spent. Then I also sold 3 long puts for 56.73. So again, a huge amount. I believe it was like 15, 10, $15. And if I hadn't widened the spread, it would have been even better. And then I'd originally brought in from prior trades 1254. So my cost basis was 71.91, and we'll see what it's currently priced at now. But and I haven't sold covered calls on it. I should have done that yesterday, but I ended up having coaching calls as well as I had a consulting call I needed to deal with. And then I had to have a build out to a client. So I ran out of time in the afternoon and wasn't able to make another trade. I wish I had looking back. So here I mentioned that I really liked Seagate, decided to hold on to these shares. So I still have all 300. And again, my cost basis is right around 71. Now, if I do get low on cash, if I do sell a covered call, I'll only do it on 2 contracts, leave 100 shares open for potentially selling. If with an IRA, you can't easily move money in and out, and the restrictions are a little bit more. So even though I have 80,000 still just pure cash that's available, I still got a margin call, and I sold 100 shares of something else that I didn't want to own. Um, and then it cleared it out. I actually had to call Fidelity because if you look at the balances page on Fidelity, you can see what the margin call is and how it works. But in an IRA, it doesn't look right. I wasn't sure what I had to do. So I called them. They gave me the number of how much cash I need to add to it. And then by making a sale or selling 100 shares, I think it was might have been a little bit more than 100 shares, but there's been some positions I was okay with getting rid of. So I'm kind of treating this as end of year. So I'm getting rid of my losers or the stocks I don't want to own, like Intel's another one example. And there's a few others. I believe I also might have gotten rid of some of what was it? Polaris. I believe I sold some Polaris too, um, which it just got hammered over the last year, even before the correction. So I sold that, and then it did go away. Now, if you have a regular brokerage, you can just click on the balances section and you can see exactly what you need to do to deal with it. Um, and I've been through it before. Again, it's in my mind not really that big a deal, unless you really get deep, get a really rough margin call. But again, I have still had 80,000. So I was kind of surprised I got a margin call with still having 80,000. But again, it's because it's an IRA and it works a little bit different. So they don't give you as much leeway as you get in a brokerage. So something to keep in mind if you're trading in your IRAs. So Seagate has good earnings and profitability, and we'll go over that. Um, Here I'm just talking about the big drop, and I believe, yeah, this was Friday, so it was down almost $6 at one point. But like a lot of these stocks, if you can pick Seagate up in the 50s or 60s, you're getting a steal. Because I do believe once the chip makers and the negotiations, things work out. And I had heard that the chip makers, a deal had already been made for them, but they've still been hammered in this market. And there's some people that say, well, some of the parts that they use for the chips aren't necessarily protected. But I don't know. I think once a deal is made related to a lot of these chip makers, that they all will pop up big time. Seagate probably better than most. Um, so again, this is what I share with my membership. If you're curious about my memberships, details will be in the description. Take a look. It may be worth your while. I try not to charge too much. I want it to be kind of an easy choice for someone. Members move from different membership levels. Some people leave, they come back. So it's easy on the budget. So take a look. It may be worth your while. Now let's actually look at Seagate. So 71.64, it's not down very much today, and actually it's still right around my cost basis, because I think my cost basis was 71.91. So let's see, 71.64. So really close. Though you might wonder, well, why do you like them? Seagate's an old company. Well, let's just take a look. Let's dive into it. So B plus, their profitability isn't as good as Micron's, but still quite good. And it's mostly because of their profit margin, but they're increasing them. And the fact that they're doing so well with lower profit margins, I think could potentially be a good thing. Growth, some substantial growth, so 24% year over year. A revenue growth forward, almost 11%, and then earnings growth is really nice. Not quite as good as Micron's, but right up there. Valuation, A. We can look at their capital structure, 15 billion, total debt 5.6 billion, 1.2 billion in cash, so they're fine debt wise. They have a good amount of cash. Let's go back to profitability and look at how much cash they're making too. So they have A minus for cash flow from operations, which is good. I like that too. Um, Now this is where I really like them. Dividends. They pay dividends, and they pay a pretty good dividend, almost 4%, 3.88, and they've been increasing them at a slow rate. They've been paying dividends for a long time. Their payout ratio is not too high, 56%. But I like to share with my members, and going all the way back when I started first trading covered calls almost 15 years ago, I've been able to double my dividends typically. And with a company like Seagate, which typically has good premium, good volume, good open interest, I can more than double. So that's almost like an 8% just through dividends and covered call premium. So I'm more than happy to own them. If you look at their earnings, it also looks good. They did miss gap a little bit back on 121. So they do have earnings. I don't know why it's not showing earnings, but they may, or future earnings. I think they have it coming up potentially in April. Um, and in here you can see it's increasing quarterly. And then if you look at earnings estimates, it again looks good, up almost like Micron, up big time, 947, 873. So a little drop off and then back up to 866. So just like with Micron, maybe I don't keep them long term. Now the dividend, I do like that dividend, so I might keep them just for the dividend alone, because if I can earn that 8%, and the beauty of when you go through a down market like this, you continue to get the dividend. And if you pick up a company like them cheap, meaning you go 10% lower, you could even get that dividend well into the 4% level. So that looks good. I forgot to mention this with Micron. I like to look at the balance sheet. I'll come down to the very bottom. I like to see if they're buying back shares. So if we come down to supplemental items, I can see. So they're not really buying back shares. They did go down here, but they went up and up. They were up a lot higher. So they did buy back some dividends here, and then even more so. So they did start at 287, and now they're right around 210, 211. They may use that just for options for their executives. So that may be why you're seeing a little bit, but that's not a lot of outstanding shares, which, now I've had other companies, like you'll look at this and it may increase 20, 30% because they're issuing more shares, which dilutes existing shareholders. So another reason why I like them. And then if we look at their ratings, they have strong buy from SA analysts. So all the people reviewing them have given them buy ratings. Good buy ratings from Wall Street. Quant is also a buy, which that means they typically meet their earnings or exceed them. So everything you might like about a company. So I had been trading them a while, and just like with Micron, having that long put allowed me to pick them up a lot cheaper. But again, I have 300 shares. I may sell 100 if I need to. If we continue with this crazy market and I get more margin calls, I might need to sell 100 shares. And I also have quite a few other positions that are pretty deep in the money that'll probably get assigned to me. But since my primary purpose with trading options is I want to own these companies. So I think Seagate could potentially double in the next year or two. And especially if you pick it up on a down market, you get it cheap. The likelihood of it doubling within maybe 2 years is pretty significant. So that's what I wanted to share with you guys, that you can potentially, by picking up some of these names dirt cheap, the future growth will be unbelievable. I did this back in 22. I bought during 22. I also bought during, I think 18, when we had the correction then, and also pretty much every correction I try to buy, some names, and it's happening automatic because of these assignments. But that's why I originally made the trades. If I go back, I've wanted to own these companies for a long time, so I'm happy to own another 200 shares of Micron and another 300 shares of Seagate. So let me know what you're doing. Do you have some stocks you recently got assigned that you plan to keep? Also, let me know if you're having a tough time. Has this been a really bad experience for you and you're contemplating giving up? I'd like to hear in the comments. I try to encourage people not to get out of the market and not to give up. This is a pretty big crash. To me, it's more like COVID because it's been so quick and intense at times, and it moves around a lot. 22, seemed like we had more time to adjust trades and deal with things. I was trading options then too. This one is I don't know, and the fear factor. It seems like they want to scare us. The media wants to scare us. I wish they would tone that down. I don't think we would have these crazy gyrations. Um, Part of that is also Trump. I want him to negotiate. I want this to get past us. He's been wanting to do this 40 or 50 years. I don't agree with the way he did it, but you know, we're all just, we don't, we, other than contacting our representatives or senators, there's little we can do. So a lot of times realizing you don't have any control. The only thing you have control over is yourself and how you deal with this time and this period, this kind of crazy time. But it will end and it will rebound at some point. And it may be sooner than any of us think. I would not be surprised though if it's after the 90 days that he's giving, but it could be before that. If a lot of good news comes out, we may rebound quite quickly. So again, thank you for joining me, and I look forward to seeing you next time.